Greetings, friends. Oleh Ivchenko here again with you, head of the company Pareto. It's time for our weekly review of the most important news from the world of transfer pricing, CFCs, and tax decisions. In today's episode, the new law 4536, the connection between artificial intelligence and transfer pricing, and also the high-profile case of Apple versus the EU. Ready? Then let's get started. On September 2nd, the President of Ukraine signed Law 4536, a comprehensive document that introduces 18 amendments to the tax code at once. Starting from October 1st, updated transfer pricing rules for controlled transactions involving commodities such as grain, ore, oil, and others will come into effect. The mechanisms for determining market prices have been clarified, as well as the approaches to comparative analysis within transfer pricing documentation. The law aims to increase transparency and prevent price manipulation in exports. Therefore, businesses should review their agreements, assess their methodology, and update their transfer pricing documentation in accordance with the new requirements. Does this change the approaches to transfer pricing? Xterra has introduced tools that analyze documentation in real time and adapt it to the requirements of specific jurisdictions. Instead of template-based approaches, they search for relevant companies based on functional profiles and check for compliance with OECD rules and local legislation. All this is done with minimal human intervention. For businesses, this allows them to reduce risks, increase the accuracy of reports, and respond more effectively to regulatory inquiries. At the same time, the role of transfer pricing specialists is becoming more analytical. The focus is shifting from manual preparation to strategic business support. On August 29, 2016, the European Commission significantly fined Apple a substantial amount of 13 billion euros for specifically violating the long-standing arm's-length principle of fair market pricing in its dealings with its wholly owned Irish subsidiary itself. The Apple guys were effectively paying only 0.005% in corporate tax in the EU, taking advantage of the double Irish scheme and aggressive tax planning tools. After appeals and years of legal battles, on September 10, 2024, the EU court confirmed the legality of the additional tax assessment. This case is an example of how opaque structuring and manipulations with transfer pricing can result in losses amounting to billions. When computer algorithms become tools of control and regulators have no intention of loosening the screws, you need to keep a close eye on the situation. The choice is simple: adapt, transform, or lose. And we will help you along this path. I, Oleh Ivchenko, and the Pareto team thank you for your attention. Leave your comments, subscribe, and set reminders. And if you need help with transfer pricing, CFCs, or tax consulting, feel free to contact us. We'll be happy to help. See you in the next episode of Pareto Point.